Alright, YouTube family, it's been a minute, so let's do an update for today, Friday the 13th. On this channel, I don't really do any news analysis or fundamental analysis, really. I kind of just focus on technical analysis and charts. So if you're looking for commentary on Israel and stuff like that, I would check out a different channel. So here we go. We're going to jump right in. This is the VIX. This is a volatility index of the S&P 500. You can see since kind of the beginning of October, we've had a bit of a drop in volatility, but you can see we went and touched this technical level right here at the 16, had a huge bounce, and now we are back up at 19, nearly on the VIX. This whole pattern right here, to me, looks like a bit of an inverse head and shoulders. If we use our imagination, here is the right shoulder, here's the head, and here would be the left shoulder. So, which could give us this little bottoming structure right here, if you want to think about it like this. Anyways, an inverse head and shoulder is a bullish reversal pattern. So this neckline right here, you can see we got one bounce, two bounce off of, and now we are testing this support resistance area at the 19, basically right here. So this is our next big area that the VIX would have to, make candles over and settle upon, if we really do want to call this a reversal pattern for the VIX. If that in fact happens, obviously we're going to be dealing with more trouble in the equity markets, but at least on the surface level right now, this does look to me to be a reversal of the volatility index, which would indicate the stock market is going to be going down more. So if we look at the VVIX, this is like implied volatility. You can see that's also up. We're running up to our 200-week moving average here, and we'll put it in yellow. That's our 200-week moving average right there. So we're coming up, trying to touch it up here again. Will it continue? We do not know. We can see the 9-day volatility measure has also jumped up very quickly, and you can see on the 9-day volatility we also have a bit of an inverse head and shoulder forming. So this would be left shoulder. Oh wow, that just made me realize this is incorrect. This would be the right. This would be the left shoulder. Whoops. See, I don't even know. Head, and then this would be right shoulder. Sorry about that, guys. Right shoulder. So similar structure here: left shoulder, head, right shoulder. If that plays out, only time will tell, but volatility is clearly going back up. Let's see. Let's look at some other stuff. Well, I guess I'll just cover the... Okay, so here's the NASDAQ. Here's this little wedge pattern that I drew. We'll see if this ends up playing out even more. Last time we got 2 touches on this blue line. Will we see something like this before it trickles back down to the other side and you keep going like this? Who knows? All I know is that this white line right here, 1500 on the NASDAQ, constitutes a previous neckline of a previous head and shoulders we made back in 21 and 22. Okay, so here's the head, left shoulder, right shoulder. Here's our neckline. Most recent pump came up to the neckline, went down, came up again, went down, came up, and now we're testing a third time. And if we get more consistent closes below this neckline, that would say to me that we're ready to test some levels back down here, back in here, back in here, blah blah blah. How low it'll go, I have no idea. Last time the NASDAQ dropped off this area, we hit the 200-week moving average, got a consolidation and pushed back up. So we could see something like that again. Maybe you dance around in this wedge thing and then eventually fall out, come touch the 200 week, consolidate and move back up. We really don't know. All I'm showing you is what's happening right now and what technical levels that I'm looking at. So we'll look at just the S&P purely. You can see this head and shoulders that I drew a while back on this channel did play out to the downside. So we have a left shoulder, a head, and a right shoulder with a neckline somewhere around here. You can see dropped off all through September and the beginning of October. We've gotten a bit of a pump, but volatility's back up and it looks like we might be turning. We might be turning once more to the downside on the S&P. Yeah, you can see these channel indicators have flipped. So it looks like this 43.85 area is acting as resistance, which would make total sense based on where we're at. So looking like maybe it'll go and test this 200 week again, just like the NASDAQ. You can see we got a big bounce off of here in October 22, and it's been pretty much up. We still have an uptrend intact, technically speaking, you know, because there was our low of October 22, and here's October 23. We're still up pretty substantially year over year if we take this wick. Okay, so we're up still 24%, essentially, if you take the lowest wick of last year. So a year over year basis, you know, stock market's still doing well. But you can see past month here, September, we've had volatility rise and equities fall a little bit. Will that continue? I have no idea. I'm just presenting you the facts. Here's an interesting chart. This is the S&P divided by 1 Bitcoin. You can see all throughout history, Bitcoin has had extreme exponential growth. There's the beginning of my chart. I only have it till October 11. But you can see, despite the S&P being in a bull market all through this phase, Bitcoin was still the one to have. Bitcoin was still the faster horse. And interestingly enough now, we are coming and making touches on our 200-week moving average. This is a really big deal if we break above and start moving upwards like this. That would mean the S&P, even though the S&P is falling, would still be in a quote-unquote bull market against Bitcoin if we get some sort of breakout like this. Does that make sense? So relatively speaking, the S&P has been the faster horse for essentially since Bitcoin started, because Bitcoin's been experiencing exponential growth. Lately, that exponential growth has seemed to slow down. We're at a level that we saw in relative value back in 2017. We saw it in 2020, 2022, and now 2023. This could certainly be consolidating and potentially moving lower. This could be a resistance level right here, and then we go back down this way. That would be good for Bitcoin. But if we get this scenario where we have a breakout of the S&P against Bitcoin, that's very, very bad for Bitcoin. We can look at crypto real quick. So, not really looking too hot. Here's the total. We're back down at about 1 trillion now. Crypto markets always like this 1 trillion level right here as a technical level. Put it back. So here's the total, take away Bitcoin. Here's the total, take away Bitcoin and Ethereum. You can see this little structure that I drew out a couple weeks back seems to be somewhat playing out. I still think it's going to spill. As you can see, if you take away Bitcoin and Ethereum, you're even worse looking technically. You know, you keep Bitcoin in there. You know, you have this nice big push up since, you know, on the year over year, we're still up 35% if we include Bitcoin. And if we take away Bitcoin and Ethereum, we're up 10% and falling. So you can see, you know, total 3 and total 2. Here's their 200-week moving average. Still moving up technically, but you can see we've done a lot of closing beneath it. So this really isn't looking too good for the crypto market. If we look at total 2 divided by NASDAQ, even worse situation. Let's get rid of this. So everything but Bitcoin divided by a high beta tech index. Well, you can see, you know, really since November 2021, you're down 70%, even though the stock market's been really volatile. That to me doesn't really look good for Bitcoin. As you know, if you've watched this channel before on Bitcoin, I've been very much a bear for a number of reasons. It just doesn't really look that healthy to me. It doesn't look like strong growth. This looks like it's trying to consolidate and move somewhere, but you really can't make any progress. For the better part of the last year, you've been moving sideways in relative value against the equities markets. If you're looking at the NASDAQ or the S&P, you know, you're still kind of just moving sideways. In dollar terms, you're up nominally, obviously, from this 15K bottom. You're at 26.7 right now. Obviously, way up a bunch. But, you know, if we would look at it in relative value against the NASDAQ, or if you were to look at it in, we'll go back to the main list, and we go down here. If we look at its relative value compared to gold, so here's 1 Bitcoin divided by an ounce of gold. This to me right here looks like a nice head and shoulders pattern that's getting set up right around this 200-week moving average. We have a left shoulder here, a head, and a right shoulder here forming to give us a head and shoulder pattern that most likely will play to the downside. We'll get rid of this channel since this been invalidated, so you can more clearly see what we're dealing with now. So multiple closes below our 200-week moving average. You can see the moving average is still going up, so you know Bitcoin could still keep pushing up, you know, in this general direction. But we're also showing some weakness here with this head and shoulder pattern. If we pop out the side here and end up doing something like this, I would say, you know, we're going back down to this ratio of 9-to-1 or something of the sort. This would be good for gold, bad for Bitcoin. So personally, I don't have much faith in it. If we pivot to gold, we can see that after following a huge sell-off, an extended sell-off, and a bit of a capitulatory dump here at the beginning, at the end of September, we made like 3 candle bodies. Let's see, let's look at this. This is on the 4-hourly, so we made like 3 candle bodies here that hit the 200-week moving average. That acted as support, and then we surged back up right up to 1916. I still think in general gold is winding up in its cup and handle. So here's the cup area, there's the cup body. This section right here is the handle. This candle, if we look on the weekly, this looks a little bit like a doji, but you know the downtrend could still be intact. We could get something basing out more like this, where it's smoother and then come back up. Ultimately, I still think gold is winding up and getting ready for a breakout out of its cup and handle. And there's a couple different ways you can measure what the performance could be. Ultimately, right now, that's all speculation. I would go watch a gold and silver channel if you want to hear price predictions. I'm just giving you real-time data with some technical levels that you need to be aware of. So we did get a bounce here at about 1800, and we wicked up to about 1900. So at least in dollars, you know, we're kind of getting squeezed in between here, 18 and 19, and I think eventually eventually gold is going to completely break out of this pattern, and we're going to see new highs on gold. If we look at gold priced in Japanese yen, for instance, we can already see that the breakout, if you want to say the breakout, has already occurred. You know, this is just pretty much a straight line up. So if you're trying to buy gold in other currencies, maybe you're using the euro, you know, gold is still essentially at all-time highs. In dollars, it's about $100 off its all-time high and winding up even higher. So all that to me is telling me, you know, a pretty good situation for gold. If we look at today specifically, Friday the 13th, we can see gold's up about 3% on the day. And we got some huge candles right here upwards. If we look at the weekly, well, we'll look at the daily. You know, here's Monday. So here's the week, you know, up 4.5% on gold. And if we look at, let's just look at Tesla. There was Monday. Tesla's about down 2.1%. Microsoft's still up. Google's still up relatively. Let's look at the S&P. S&P's had a down day, but still kind of up. But you see what I'm saying, though. We got the VIX rising very sharply here. Volatility measures rising sharply for the traditional markets, but then we also have a 5% jump in gold. So that tells me that we're getting a bit of opposite movement. Looks right now to be that gold and silver are outperforming relatively to equities this week, you know, and that obviously shifts around and changes, but I'd sure rather be in gold and silver than an equity right now, unless perhaps maybe you were following along with my channel, and I don't know if it was last video. I believe last video I mentioned that I believe oil to be going back up. Now I believe oil is on a tear back up this way because the surge in the dollar. If you've ever heard of the petrodollar, basically the dollar is super intertwined in the price of oil and the happenstances of the oil market. So right now we have a strong dollar and we have oil going up. Obviously gas is super expensive right now. If we go back to oil, this is WTI crude. We're sitting at 85 and it looks like we're consolidating and might actually start, we might start moving back up again. Kind of depends on what time frame you look at this at. Anyway, so oil up, gold up. Conversely, that means some of these oil stocks, here's Chevron, are not really doing quite as bad as the rest of the market, I want to say. I'm saying that with a caveat. Because of the strong dollar and because of the strong oil price, some of these equities that have to do in the energy sector are doing okay right now relative to their counterparts. So here's Sinclair, here's Chevron. What is this? This is the energy section of the S&P. You can see we're still sitting very, very close to all-time highs if we're looking at energy specifically, which would totally make sense. The strength of the dollar's gone up, price of oil's gone up. You know, energy is still expensive relatively compared to other things. And I will give you one equity that has been working out very well for me. This is TK Corporation. They are a fleet of liquid natural gas tankers that essentially transports liquid natural gas and crude oil around the world. If we go to the monthly, we can see that TK has experienced some volatility as of late. There were a lot of buyouts and other things that happened back here. Anyways, the share price has been destroyed, but as you can see, in October of last year, we moved above our 200-week moving average, which for me constitutes a move into a bull market. We also have the crude oil price going up, so I opened up a long down here at about $5.80, $6, and that's proven to be a good trade thus far. We're almost back up at 7. I don't know if I'm going to continue to long this, but if you look at this this yellow outline that I made, we could be dealing with some sort of inverse head and shoulders right here. What I'm thinking we do is consolidate in here, and obviously this really depends on the natural gas price and the oil price. But assuming my thesis is right, we consolidate in here, you make another shoulder, and go back up this way. The share price has just been absolutely destroyed on this multiple times, so I think it's a little bit undervalued compared to its counterparts like Chevron or Shell or really well-known companies. Anyways, do your own research, but this has been a trade that's been working for me thus far, so I wanted to share it with you. You can also see if we take TK and divide it by the SPX, we've had a breakout of the 200 week, or on the 200 week, excuse me. So, and this could be this inverse head and shoulder that I'm talking about. So that'd be left shoulder, head, right shoulder. We'll see if this breaks out. Obviously, we're gonna go back up this way. So, just a quick little equity. Despite the VIX being up, there are still ways to make money in the stock market. You could have bought in gold when it hit its 200-week average. You could have bought into a lesser known oil and gas equity as the dollar and oil still surge ever higher. Okay, I'm going to pivot really just to precious metals. We're already at 22 minutes. We've already talked about gold. Okay, so here's another inverse head and shoulders I drew of gold divided by the NYSE. You can see we got a nice consolidation here around our 200-week moving average, and it looks like we are moving up again. My hope is we get to the end of this wedge as quick as possible. We get some sort of squeeze and gold goes way back up this way, completing its cup and handle, moving above 2K. All the good things we want to see for gold, I think, are coming pretty shortly. I give it a year, which on the macro time frame, yes, a year is pretty shortly. If you think about it, folks, we are looking at charts that are decades long. You can see gold has been, it still technically is underneath its 200-week moving average, but instead of the 200-week moving average going down, we've had a hard pivot here in February of 20, kind of around COVID era, and now we are moving back up in relative valuation. So, here's a chart of gold divided by Amazon. This is almost looking at it divided by Bitcoin. So you see, it's always been in a bear market compared to Bitcoin, compared to Amazon, but you can see as of late, for the first time in history, we've had substantial closes above the 200-week moving average. Now, the 200-week, that's like a 4-year moving average. So if this thing starts moving up, then the chances are of this being a macro trend change are higher, in my opinion. You can see if we look at gold divided by Bitcoin, I'm obviously hoping for something like that. We'll have to wait and see. We've gotten one touch and a rejection there. Obviously, we're getting close again. You can see Amazon, we've broken out, and we're probably going to move higher. Against the dollar, and we're still moving up. So here's gold divided by the Russell. Okay, definitely moving up. Looks like we rounded, and we're going to start moving up against the Russell. There's against Tesla. So as you can see, similar to Bitcoin, gold has never been in a gold has never been in a bull market, relatively speaking, to Tesla. But we're getting closer and closer to being on the other side of this 4-year moving average. So that would be a very big deal if that happens to gold or silver. We'll look at silver. Let's look at this daily. Silver generally tends to lag gold. So you can see silver came down, hit perfectly this this trend line that we drew that has been going all the way back to March of 2020. And then we had another touch here in August 2022. And then we're getting another touch here in 23. Sorry if my chart's a little busy, but you can see I'm diligently plotting silver's course. This thing I drew a couple weeks ago, not exactly playing out, but it's a similar situation for silver. You're getting really squeezed up in here, and I think eventually you're going to get a pop out and move back above. Because if you look at silver in a different currency, say the yen, we're still at all-time highs, and we're actually at the top of the cup if you look at it. So, you know, silver and gold premiums at anywhere else but the United States are pretty much at all-time highs. Luckily, if you're an American citizen, you're getting a discount on precious metals right now because your currency is stronger. It's stronger than its competition. The only reason it's stronger, though, is because of, you know, the Euro-dollar system, the Federal Reserve Bank. I don't think it's going to last forever. But we'll look at one more metric since we're on the dollar. We're going to look at the 2-year yield divided by the 10-year yield. If you follow my channel, this is a super key indicator of recessions and market crashes. It's pretty much denoted every single one of them for the past 2 decades or so. You can see the yield curve is still in the process of uninverting, and I really do believe once we cross this yellow line here, the 1.0, that we will be in the end game of whatever macro trend this is, and we'll have some sort of shift. Gold will break out, blah 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 blah. In what order, I don't know, but as you can see, volatility is coming back up, and yields are getting ready to cross this nice threshold here. So to me, it looks pretty clear what's going to happen. This whole time over here, this section, we were holding a balloon. We were holding, you know, a soccer ball underwater. You can only hold the soccer ball underwater so long until it floats back up with some speed. And, you know, it's certainly coinciding with yields getting ready to uninvert. So a spike in the VIX and the yields uninverting in tandem would be really cool to see. I've been charting and plotting and waiting for that for the past basically 1.5 years now. So it'll be on this channel first if it happens. Anyways, good luck in the markets. Peace out, guys.